have any management fees or guarantee fees. We're the same MER, we're the same price as the underlying mutual fund. So fee-wise, you're getting a very, very good deal on that side of things. Plus, you're getting a death benefit, and you're getting all the same estate planning benefits of a segregated fund. So in the segregated fund world, this is the best price, even compared to high net worth pricing in a segregated fund platform. It's the best price. Okay, so what we're going to cover here today is the applications. Now, eventually, they will probably be a thing of the past because the e-app will come out. So I'm hoping that it's Q2 or Q3 of this year. Don't hold that to me, right? I'm not the marketing department. I'm not the merger king when it comes down to everything that's going on. As you can imagine, with Le Capital and SSQ combining, there's so much that has to be done in the background. There's all of the actually making Beneva an actual insurer, right? And that's what took so long. And in fact, just this January, just like within the last couple of weeks, Beneva actually became the actual insurer. So until then, Le Capital and SSQ still underwrote all of the insurance and all the investments.
So now,
yes,
Beneva is.
So Beneva is truly the insurance company now, okay, and the employer, really. So last year, Le Capital undertook the brand and the marketing of Beneva, and then this January, SSQ did the same. And then also on the insurance side of things, I don't cover the insurance, but the insurance side of things, SSQ and Le Capital, we both had their insurance product lines. Those merged as of this January. Okay, so now we have one line of insurances for life, CI, and then of course the DI, which formerly was the Le Capital. That hasn't changed at this point. It's still there as well. Okay, so that is a big change, especially for my insurance reps. Yes. Now the e-app, of course, they can train on that. So Andrew is your rep here up in Edmonton, down in Southern Alberta, it's Adeline, and of course we have people all across Canada. So for those who are joining us outside of Alberta, I guess, and the prairies. So that's a big change for them. They are starting with the e-app on the insurance side of things. The investments will come afterwards. So probably into Q3, so into June, because we don't want to make that change actually past in the RRSP season. That would just be not good. Okay, so everything stays the same on the investment side of things for this time being. Okay, yes, you do have mobile office for the iPad. We'll try and go through those. We should have time here today as well, but what we're going to do first is we're going to go through the investment apps on the website, the fillable PDFs. So for those of you who are not sure where to find those, let's start with that first, with the investment applications. So you'll see that I've gone on to beneva.ca. So that's the website. It's going to say, good people have you covered. This is the home page. So where we're going to go is we're actually going to go over here to advisors. You'll see in the top left-hand corner, it says shop, services and tools, and advisors. So I'm going to show you where to get there and then how you can bookmark these certain pages to get there. Once I click on that, it opens up a side panel. It says individual insurance and investments, and it opens yet another panel as well. I'm going to click over here on documents. This is going to take me to this page here, document center. Okay. Now, there was a recent change in this. Probably not a change I would have made. I'm just going to say that because now it actually makes you filter it. So I'm going to scroll down here. It makes you filter it by product. So I'm going to click on savings and investments, and then I'm going to click on forms. Okay. So I'm going to click on forms. Now it does filter it. It says I have 37 different results. These are all going to be alphabetical. Okay, starting with the A's and going all the way down. So the three main applications you're going to use. The first one here at the top here, where you can see my cursor, says application instructions, non-registered plan, RSP, RIF, and then LIRA, etc. This one, I know that I said that the investment accounts was for registered assets only. So your RSPs, TFSAs, LIRAs, LIFs, RIFs. Okay, so why does this say non-registered on it? The reason being is because in a different product line, the GICs and the annuities, we can accept non-registered money. for GICs and annuities only. Okay, so for the investment accounts, the main product line, which is the segregated fund-like product, we accept the RSPs, RIFs, we do accept LIRs and LIFs, and TFSAs. So the three main applications while we're on this page is this first one here for your RSPs and your RIFs. Okay. 2 down is the Pan-Canadian. So I'm gonna actually open this one up just to make sure. So you'll see on this one here, if I open up this one that says the non-registered plan, RSP, RIF, then LIRs, you'll see down here it says Quebec only for these ones. So don't use, if you're outside of Quebec, don't use this form for your LIRAs. Okay, don't get caught on that. When I was an advisor, I sent in an Alberta LIRA on this application. I had to go back to the client and I had to get the Pan-Canadian filled in. This one is for LIRAs and LIFs outside of Quebec. Okay, that's your second main application. The third main application is your TFSA application. Okay, so there's 3 main applications for opening a new account. Okay. All right, so let's go back to this one here, the RSP and RIF one. So what we're going to do is we're going to demonstrate if we're filling out an application, how do we go through each of these sections? So I'm going to scroll down to page 2, where it starts with all of the contract holders identification. And I'm going to fill this in just like you were a client, and I'm actually filling this in for you. All right. Thank you for the tea. Keeps my voice warm, right? And so this is a little bit of a side note. You know, when people are talking, public speaking, and someone gives them a cold water, that actually constricts your throat or your vocal cords and makes it harder for you to speak. You warm that up, and this is nice room temperature, by the way. Right? So if you have warm vocal cords, that's easier for you to speak. Okay, just a reminder. Anyways, side note, just a little thing, right? It can't all be business today. All right. So let's start with this. The first line up here says new client. I'm going to say yes, it is a new client. Now, in here, I'm just going to start filling this in. This is a fillable PDF. You can fill it in from the browser here and then download it or save it as a PDF. Okay. If you download it though, it's going to download a blank form after you filled it in. So if I wanted to do this, I could actually go up here to, now my icons are a little bit hidden here. I'm just going to move this a little bit. There we go. So you'll see these icons here where I can download this, but if I download it after I filled it in, it's going to be a blank form. After all that work you went through to fill it in, and you're downloading a blank form, not good. So use this next icon, the print menu, and if I wanted to save this, I would save it as a PDF. Okay, I'm not going to do that yet, just because we haven't filled it in.
After filling out, save it as PDF.
Yeah.
Then you don't have to.
Exactly. Okay, so I'm just going to fill this in. I'm going to go through this just with some not real information, except for my name, of course.
Yeah.
I'm in sales, my gender. Sorry. I don't live on Easy Street, by the way.
Yeah.
So some of this is a little bit boring while I fill this in, but you'll get the point. And I don't like spelling errors. It's just that everybody's watching me type. Oops. It doesn't like it.
Yeah, that is the same feedback when you put the TFSA. You can fill even the phone number.
Not the
So,
phone number, SIM number,
okay.
and
I'm going to show you the trick.
yeah.
Okay, so you'll notice when I filled this postal code in, that when I did it, oh.
Okay. Well, the problem everyone will face when they fill up, it doesn't go through. Let's go through the trick.
Yeah, let's go through the errors. So you'll notice here, I left the space out of this.
Yeah.
And if I try to do this, it gives me an error, right? So I'm like, okay, all right. So the input ballot is valid. invalid. So I have to have that space in here in the postal code. Okay. So the first 3 characters, space, and then the last 3 characters. Telephone number.
Yes, go to RRSP
Okay.
application.
So if I put this in, just like this, and try and go to the next one, it gives me an error. Why? Well, because however the format that I've tried to put this in doesn't work. So it has to be, I think,
No, not the bracket.
not the
No,
brackets.
not the bracket.
I should know this, hey?
Yeah.
It's
Just
been a
the
while
space.
since I filled this in.
No, I did actually before this one. Then dash, yeah.
Okay, so the first 3 characters, then the space, next 3 characters, then the dash.
Yeah.
And then the last 4 characters. I know. I know.
User-friendly.
It should be
Or else
user-friendly.
it should have the format there that
Yes.
format.
You don't know what? I think it's just one of those things. And this is being recorded, isn't it? I'm going to say this is one of those lazy things that someone in the marketing department, when they formatted the fields, they just didn't bother.
Need to wait for the feedback.
Don't send this to my marketing department, okay? All right. Okay, so first 3 characters, then the space, next 3 characters, dash, and then the last 4 characters. Okay. It's just one of those things. I'm not going to put in the other telephone numbers. It doesn't matter. Now, the social insurance number, this one is the first 3 characters, then the space, the next 3 characters, another space, and then the last 3 characters, just like that. Okay. I'm going to make myself younger than I am, and it doesn't like it.
Slash is.
Okay. Oops. Okay. I just put the forward slashes in between all of these characters. Okay, I'm going to say English. This next part here, where it says the public service employee stuff. If you're in Quebec, you can fill it in. If you're not, leave it blank. Okay.
Yeah.
So the question remains, why is this even here? Well, it's for some of the LRRS, especially when it comes down to Quebec. Le Capital actually started for public service employees in Quebec. Okay, so that's why some of these things on the forums are a little bit Quebec centered. Okay, so for your purpose, unless you're in Quebec, you can leave this blank. You don't need to fill this part in. All of this, the next section of section 1. Okay.
Even the employer, we don't have to bother.
Even the employer, you don't have to bother at all. No. Okay. Section 2, the plan details. Really, the only things that you're going to do on this form is either the RSP, the RSP spousal, the RIF, or the spousal RIF. That's the only 4 things that you can use this application for, unless, of course, you're doing a non-registered GIC or annuity. Okay. So for most of you, you're going to be doing an RSP or spousal RSP or some kind of a RIF. Okay. I'm just going to do a contributing contract holder, or do you want me to do a spousal RIF or RSP?
Spousal is first go and then quickly go on spousal later on.
Sure. Okay, sounds good. So let's do an RSP first. Okay. So next section, section 3, spouse's identification. This is a really good place to say these boxes that are in green, areas where it's in green, give you hints to fill in the application. They're not just there for marketing to make it look good. Okay. So there's great information in there. When do you have to complete this? So this section here, to be completed in the following cases, where it's spousal RSPs or spousal RIFs, and RIFs or LIFs when the minimum amount is based on the spouse's age, or the immediate annuities in the case of a joint and survivor life annuity, or if the guaranteed period is based on the spouse's age. If you're doing a contributing RSP, or like a contributing contractor holder RSP, just a regular RSP, not a spousal RSP, you can leave this blank, the spouse's identification. Now, in saying that, if this was a spousal RSP, now you would fill in the spouse's identification. And so this is a good point to say with a spousal RSP. Which one do you put as the contract holder? It's going to be the one who owns the contract, who owns the RSP. So typically it's going to be the spouse, right? The spouse's identification is going to be who's contributing, the contributing spouse. And that contributing spouse is the one who's getting the tax deduction.
If you make it more easier, if we are saying that husband is contributing and wife is the contract holder, it will be easy for everyone to understand because spouse is a common.
Yes.
Yeah, we'll get confused. You see, now the husband is contributing and the wife's.
Yes. So if the husband is contributing, making the contributions, that the husband would be listed under the spouse's identification. And the wife would be in section 1 as the contract holder. Okay. So let's go back to whoever is paying the amount is going under the spouse's identification under number section 3.
And husband get the tax receipt.
Correct. In that case, yes. Yes.
Okay, then
Okay. So if you had a husband and wife,
yes,
and the husband is making the contribution,
yes, yes.
the husband is listed in section 3, and the husband, because he's contributing, he gets the tax deduction.
Yes. That
Okay.
means number 1 is wife. Number
Yes, in that case, yes. Okay. All right. So I'm going to skip over section 3 because I've changed this back now in section 2 to contributing contract holder. Okay. All right. Oh, sorry, went too far. Section 4 is the beneficiary designation. I'm going to take a couple minutes just to explain something when it comes down to this. The beneficiary designation, you can either name the estate. Typically, you don't name the estate. Typically, you're putting in named beneficiary, and that would be a designation. So as an example, I'm going to put whoever my spouse is or whoever that is, right? Okay, and their full name. Okay, so their full name, the relationship to the contract holder. Here, I'm just gonna, I don't know, doesn't matter. Doesn't matter what their name is.
Yeah, pair can be the beneficiary as well. The husband can be beneficiary here, is it?
Yes.
Yeah.
I'm a perfectionist.
Yeah, no, this is
Okay. And then whatever their birth date is. Now, revocable or irrevocable? Which one do you normally use?
irrevocable.
Revocable? Why?
They can change.
Because the contract holder, or the owner of the contract, can make changes to the contract without having to have the beneficiary sign off on it. Now, there are some cases where you may want to do an irrevocable, but very few. Okay,
The spouse is
maybe
stronger.
it could potentially be, let's say it's a debt situation
Yes.
where someone has lent some money and you're opening up a contract and you want an irrevocable beneficiary so that if that person passed away, that debt is paid off, potentially. You're probably going to find that more on an insurance file, not so much on an investment file though. Okay, so I'm going to check out revocable. I'm just going to make it 100%. You can have 3 or 4, or you can have however many beneficiaries, but the total, the share, has to all add up to 100%. Okay, so that's the primary beneficiary, and you can name contingent beneficiaries. Now you'll notice in here there's only 3 lines for contingent beneficiaries. If you have more, like let's say, you have your spouse as the primary beneficiary, but you have 5 grandkids, and you want the 5 grandkids to be the contingent beneficiaries. Just put them on a letter of direction and attach that and say, as per letter attached. Okay, and then send that in with your application. Okay. All right. Now, what happens if you name, I'm going to say your child. Is there anything wrong with that?
Which normally RSP is transferred to a spouse.
Yeah, but what if you don't have a spouse?
Yeah, then,
Right? Then maybe you're going to name your child. What happens if your child is a minor? Then you probably should name a trustee.
Same basically.
And I can just put the trustee's name on there. Okay.
So what does that trustee mean?
The trustee is the person who handles the money or takes care of the money for the child until they reach the age of majority. So in Alberta, it would be 18.
So it can be anyone, trustee, or relative, parents.
It can be anyone.
It
It
can,
can be anyone trustee can be.
as long as they're over 18, the trustee, right? And it may not be the person who's actually looking after the child physically. Maybe the person who's looking after the child physically is not very good with money. Sorry?
The company to the trustee. Maybe few people,
Like
Mm,
trust.
just like the trust account, we have a company. And
Potentially, I would check that out. I don't want to give you a definite answer on that one just because I think there might be some,
legal issue.
yeah, but I think it probably could be done. Yeah,
As per my knowledge.
in that case, you probably have a will. That's probably a good question for the lawyer when you're setting that up. Yeah, because there can be formal trusts as well. Now, here's an issue that I've run into. And this happened, I don't even know, I can't remember, it was about 2 years ago, where someone had set up an RSP or a I think it was a TFSA actually. Okay. Someone had set up a TFSA and named a minor child. Okay, so a child, which is fine, but they made it irrevocable. So the child was 10 years old, I believe, 8 or 10 years old. But the contract holder wanted to make a change to the contract. Okay, so you have a minor beneficiary. Okay, sorry, this part in here. Okay, I'm going to read this by naming. So I'm going to start here actually. By naming a trustee, the benefit is payable to the trustee who will hold it in trust for the minor beneficiary until he or she is of legal age, right? And then it goes on for about the trustee and whatever else it is. However, this part inside here, it was very, it was tough because if the beneficiary is a minor and the person wanted to make a change, technically the irrevocable beneficiary has to sign off on it. But if the child is it says here, starts here, a minor irrevocable beneficiary cannot consent to a change or transaction, and the minor irrevocable beneficiary's parents and legal guardian are also unable to sign a document in that regard on his or her behalf. So if the contract holder named a minor beneficiary irrevocable, they cannot make a change on their entire contract until that minor becomes of age. So even if they wanted to change a beneficiary, if they wanted to change a PAC, they couldn't. If they wanted to take money out of their TFSA, which is what that case was, they wanted to redeem some money. They needed some money out of their TFSA. They couldn't, because the minor irrevocable beneficiary should have signed, was supposed to sign, but they can't because they're a minor and nobody can sign on their behalf.
But the beneficiary will be active after, right? In the event of the person who is already the owner of the account passed away, then the beneficiary will come in the future.
Yes,
But not
yes,
before
and it
that.
would have to be paid out to a trustee.
Yes. Oh, so that was that.
Yeah, but literally the person wanted to take some money out of the TFSA and they couldn't.
The contract is alive that time.
Yeah,
But even that time, they are not able to change.
no,
No, once you.
because
put the-
by naming an irrevocable beneficiary.
No, but once you put the irrevocable, you cannot change till the consent has been
That
given
is
by
fine.
the
To take out the
beneficiary.
money,
You cannot take out the money either
No,
till you take the.
Couldn't take out the money.
but
They have to sign, both of them have to sign, take out the TFSA money. Yes.
yeah,
That's the insurance part.
Yeah.
what my assumption is that if it's a beneficiary, so beneficiary will come into the picture if the contract owner
It's not.
passed away is not alive.
yes. In that case, then the contract is going to be paid out.
But the contract owner can take out money anytime. We don't need any beneficiary.
While they're still alive?
No.
No.
No,
By naming an irrevocable beneficiary, if you want to take money out or make a change to the contract, the irrevocable beneficiary has to sign.
Oh.
because this
Just
is
like a life insurance.
This is
Yeah.
the problem.
That's
You cannot do any changes.
Yeah.
Ah,
Yeah.
Either you money take
So-
out or any changes in the contract, you cannot do
That's
anything.
very important.
Yes.
So I just, so what was the outcome? What, was there?
They
any
couldn't
resolution?
redeem, they cannot redeem any money. They couldn't redeem any money, really, and they had another 8 or 10 years until the child got of age for them to even access the money. We couldn't even transfer it to another institution.
So they, in other words, they could have come after advisor. if they wanted to.
Yes. Yeah. Okay. So
And if it's a trustee assigned, so they can.
So is that was done by mistake?
On behalf of them.
the trustee cannot even sign either.
Simply keep it simple.
yeah.
Always
Yeah.
put revocable.
Yes,
That's
Yes.
the law. Thumb rule.
I said
Revocable,
this.
yeah.
just to scare you. When you're doing
I don't
irrevocable,
remember
think twice about it. Okay,
Ever, like in, I have done on a life insurance or any investment product. I've never done.
Irrevocable.
Yeah.
Because it's not worth it.
I never promoted.
We have a question. Mubashir,
Sure.
you have a question, I think. Yeah?
is there a question?
He says,
Was
Yes.
it done by mistake?
I believe it was done by mistake.
Okay.
Yes. Unfortunately. Okay, section 5. This is for deferred life annuities or annuities. Okay, so if you're doing an RSP, we're going to skip over this section, leave it blank. Section 6, because we're doing an RSP, again, for RIF and lift payments, we can leave this blank. Okay,
if we need to fill, if we're doing.
Yeah.
RF, then
so if we were doing a RIF,
Number 5, please. Start.
if we were doing a RIF, we can leave this blank as well, because we're not doing an annuity, a life annuity. We're doing a RIF. If we were doing a RIF, then we would fill in section 6. And again, these green boxes will give you hints. Okay, so if no boxes are checked and the spouse's identification section is not completed, the minimum payment amount will be based on the contract holders or the owner of the contract's age. Okay, not the spouse's age. Okay, so in this case, because let's say we didn't put a spouse in there in section 3, is a minimum payment based on the spouse's age? We're going to say no. Okay. Choice of installment payment. How much does the client want is what this is. And it's check one option. So do they want just the legal minimum because it's based on percentage based on their age? Right? Okay. And that's a CRA rule. So if you wanted to look for what is that legal minimum, it's a percentage. You can, I just Google Canada.ca RIF payments, RIF amounts. Okay. Canada.ca, so Canada Revenue Agency, they have all of that documentation in there.
Where to start, right? RSP, conversion.
When would they start a RIF? So converting it from an RSP to a RIF, they have to, so they're mandated that they have to convert an RSP into a RIF by December 31st in the year in which they turn 71. So if I turned 71 this January, which I'm not, by the end of this year, then I'd have to convert my RSP into a RIF. Okay. They can convert it before then if they wanted to, okay? But then they have to start taking payments from it. And you can convert some of it, an RSP, into a RIF, but not all of it. Okay.
One question here, when if I have a RIF, I'm 60 and have made earlier RIF, now I'm making the minimum payments as the legal says. Is there any tax implications
Yes.
on those?
Yes, any payments from from your RIF are going to be taxable, just like an RSP payment. Okay.
This is the same bracket, 40%.
It depends what your marginal tax rate is. Yeah. Okay. So legal minimum, legal maximum. Actually, I'm going to say another thing. If you convert money into a RIF, you can unconvert it as well. You can convert it back into an RSP as long as you're under the age of 71. So let's say someone says, okay, you know what? I'm going to choose early retirement at age 60. I'm going to convert my RSP into a RIF, start taking income from it. But then at 65, let's say they take another job and they say, hey, you know what? I don't need income anymore from my RIF. I'm going to convert it back into an RSP. You can do that with a RIF. You can't with a LIF.
LIF is the locked account.
A LIF is a locked account, correct. Once you convert it from a LIRA into a LIF, you can't unconvert that. You can with an RSP. Okay. Okay, so let's say we wanted the legal minimum if it was a RIF. How often do I want to pay it out? Do I want to pay it once a year, twice a year, quarterly, or monthly? Again, check one. Let's say it's monthly. Okay. So I've checked my one installment payment. I've checked my payment frequency. Next one, date of the first payment. Let's say I want it March 1st, right? So I put in, 2023 0301. Okay.
We can defer as well.
You can defer that as well. Yeah. So maybe it's June that I want the first payment. I can put June in there. Tax exemption on minimum. What does this really mean? So it says the default setting for the minimum is no tax exemption. So that means if I wanted to have a tax exemption, that means that I don't pay tax. Right? How many people generally pay no tax? Very, very few. Generally, it's going to be there's no tax exemption. You'll or your client will let you know if they're tax exempt. Okay, so if you don't fill in anything in here, it's going to be we're going to withhold taxes and submit them on the client's behalf. Okay. And then documents required because we're paying the person as an installment for their RIF. We do need to have the banking information. Okay, so then attach a copy of a void check or their banking direct deposit slip, whatever so we know where to pay this, right? Otherwise, we're going to send them a check. Okay, but that's not very convenient. Okay.
One more question.
Yes.
Whenever they do convert or whenever they start taking payments, is there any additional fees or anything from the Beneva or something?
No, there's no additional fees that we charge once they convert it and they start taking money. No.
So it's the same thing with other RRSPs or the FSA on the time of withdrawal, there is no fees or anything.
Not from our standpoint. However, that does depend on what kind of fee series you've put them in as an advisor. So if they're in a deferred sales charge, there may be a sales charge that way because of that fee series you used, right, as an advisor. Or if there's a chargeback series, then there may be a chargeback to you as the advisor based on how long it's been in there. Okay, yeah. So no administrative fees from our standpoint, but there could be sales charges or chargebacks based on the fee series that they're invested in. Okay, does that answer your question?
Yeah.
Yeah. Okay. Okay. So section 6 is only for RIF and LIF payments. Okay. Let's go back to our original what we were doing with an RSP. Okay. Section 7. This is for immediate annuities. We're not doing an immediate annuity, right? So we're going to leave that blank. All of section 7 there. That's the rest of the page. Next section is the source of funds. So the source of funds is where is the money coming from to fund this account. Okay, so you'll see here that there's lots of different options and it's the entire page of options. Okay, so lots of different stuff in here. So the most common being either a PAC, so a pre-authorized debit, and you can either do a single payment, which is a one-time payment, or you can also do recurring PACs, and you could do both. Now, in this case, it's not letting me check off both if I have both, okay? But I may have both. Okay? And today, I'm actually going to show you that we're going to do both. We're going to do a one-time lump sum into it. We're going to do a monthly PAC. And
Transfer.
I'm going to say we're also going to do a transfer. Okay, so I'm doing 3 different types of transactions where the money is coming from on this one application.
Yeah, especially this area is really confusing.
Yes.
Yeah, please.
Absolutely. Okay, so we're going to do it one time, we're going to do PACs, and we're going to do a transfer. So transfer from another financial institution or employer. And we say, if you can get a copy of the statement, send it in. Okay, so let's say it's, I don't know, $53,789, and you know it's 42 cents. That's on their statement. Here's what I'm going to tell you. It's not going to be $53,789.42 when it comes back to us. Why? Because markets fluctuate on a daily basis. So why even put the cents on there? And in this case, I'm going to actually round this up. I'm going to round it to 800. That's fair enough. That's really all you need. I mean, if you wanted to put it as 789, there's no problem in that. Where this becomes an issue is, you know, if you say it's $42,000 and the check comes in as $73,000, we're going to question that is, why is it so much different, right? But if I round it up to $800 and it comes in as $55,100, our processing team is going to be like, okay, well, that's pretty close to what they said. It's fine because there's market fluctuation.
But normally, if we put a couple of $100 into that, and make it a 54,000.
You could do that too. Yeah.
But the other thing, and when we're doing
T2033 transfer.
when you transfer, it says the amount and transfer, whether total in cash.
Okay,
That-
we'll show you that.
Yeah.
We'll show you when we come to the T2033. Yeah. Even on those, I don't put dollar amounts. If you're transferring the entire account,
Yeah, I
Don't-
usually mark the
just
total
total.
in cash.
and then don't even worry about the dollars.
Exactly.
Yeah.
That's what I was.
Some cases, maybe, and I've used this in the past is, this is getting ahead of ourselves on the T2033, but I've used it in the past where, let's say I'm only moving $10,000 of the $15,000 that's in the account. And I've done that when they had a group RSP plan through their work. They still wanted to continue contributing into the group RSP, so I don't take all the money and close the account. I leave a few $1,000s in there. Once a year, I'll move $10,000. Right?
Good
Then it's a
question.
partial
Yeah,
transfer.
if there's a group RSP, it means we still whatever is they call it vested, we can transfer.
Depends on the plan. Depends on the plan that they're in. Yeah. Yeah. Depends on the employer package that they have. Okay. So in this case, who do I want to transfer money from? IA sounds good. I don't get pleasure out of putting IA Clarendon on this as an example. I do. All right. So let's go through. So we're going to do 3 different sources of funds for this application, but let's go through the rest of the application here, the first source of funds.
Sorry, one more question.
Sure.
How about if I want to transfer for 3 different institutions? Can I do it in one application or I have to do 3 different applications?
Oops. You can do it on one. Let's say we're taking money from TD Bank as well, and from Scotiabank. I just start
That makes
listing
sense, yeah.
them there.
But
Yeah.
we'll be needing 3
3
different
different
transfer.
transfer.
Yeah, I can put them all on this application as one, but then when it comes down to the T2033, the transfer forms, then I need a separate one for each institution. Yes, yeah. In this case, I'm going to keep this easy. Let's just take this out. Yes, you can transfer and you can put it on the same application. Okay. The next part here, transfer from one La Capitale account to another. Let's say you have, in this case, it says from a non-registered plan to an RSP. So in this case, you could do it if we have let's say a non-registered GIC with us and they wanted to use that as an RSP deduction. We could transfer it from that non-registered GIC into the investment account into their RSP using this. Okay. So in this case, I would just put their plan number or their account number. Let's say it's it's going to be a 500 number, 502-123-456. That's the La Capitale number, whatever their account number would be, right? That's just a sample, okay? Or some people may say, hey, I want to move some money from my TFSA into my RSP. Why would they do that? Only really if they really needed a tax deduction and they had no other funds to source to fund it, right? Because now you're taking money from a non-taxable position into a taxable position. Probably if they have other monies, do it that way, or maybe they can get an RSP loan for that. Okay.
I have one more question.
Sure.
If you have some money or registered sitting in a bank, can you transfer into a TFSA?
Yes.
Okay, and if there is that money is from a long time and you have interest on them, you have to pay the interest, it goes in your income or how?
Yeah, so the interest can be a capital gain. So you might trigger a taxable event when you're transferring non-registered funds. Yeah.
So if I do it in a PFS, then probably I have to pay the tax on that one. And if I keep that non-registered still in the non-registered in the another institute, then probably not has to pay the, or the non-registered, they give you the interest every year.
Depends how it's structured, depends how the non-registered account there is structured. Because it may not be paying out the interest every year. They might just be reinvested. Right?
Reinvested,
So
yeah, most of the
when-
time it's reinvested.
When they close that, or when they close that non-registered, is when the taxable event is going to happen.
Okay,
if it
even
does.
with the, if that I have some money in the Bank of Montreal, I want to change to the law capital or SSQ.
Yeah.
And it's non-registered and it is sitting from the last 20 years.
Okay.
And I have quite a bit of capital being on it.
Right.
So if I change that one to the law capital, so I have to pay the tax on that one.
Because you're closing that account. Because you're not transferring the actual funds or the holdings that you have in there. So let's say you have it in, I'm just going to say let's say you have it in one stock. Let's say you have TELUS stock as an example, right? Once you close that, you're actually not transferring the actual TELUS shares, you're transferring the dollars. So you're actually legitimately, you're closing that account, selling off those shares. Once you sell those shares in a non-registered, that triggers the capital gains. Okay. Yeah. Okay. Because you're transferring it in cash, not in kind. If you're transferring the shares directly, which we don't do, you can transfer the shares, you're not selling them, you're just transferring them. That's called an in-kind transfer. Okay. Very, very rare. We don't do, if someone had TELUS shares as an example, they're not passing the TELUS shares from the bank to the Capital to manage. Okay. Other things on this, where other monies could come from, let's say you're converting an existing plan. In this case, if you wanted to convert your RSP into a RIF, you put the RSP account number in here, and that's what we're going to convert into the RIF for them. Okay. So as an example, let's say the RSP account number was, again, 502-123-456. Okay. So that's the Capital account it would be coming from in that case, if you're converting. And then again, checking one option. What are you doing? How much are you converting? Are you converting the entire plan and closing the RSP account? Or are you doing a partial? Okay. So I'm gonna say no. Now I can't unclick that one. That's okay. Okay. And then just the account numbers. Okay. So I'm going to check that off. I'm going to close this because we're not doing this. We're not going to convert. But if you are converting, this is how you do it. Okay. Is the money coming from a B2B loan? So as an RSP loan, we're in RSP season right now. Some people are looking to fund an RSP and get a bigger tax deduction. So maybe they go to B2B, which is B2B bank. They get an RSP loan and they want to put in $20,000 of an RSP from the loan proceeds. Okay. Or another one is unlocking a locked-in plan. So this would be the case. You wouldn't do this one on this application because you're only unlocking liras and lira, right? Which this application is not for liras except in Quebec. If you were going to unlock a plan, it's going to be on the Pan-Canadian form, the lira application. Okay. And then all the details of that as well is the remainder of that. Okay, so source of funds. For our purposes today, we're doing a single payment, a one-time payment, recurring packs, and a transfer from IA Clarington. This should not say this is not an advertisement for IA Clarington, by the way. Don't get IA Clarington stuck in your brains. Okay, section 9 is the investment instructions. So section 8 was the source of funds. Where's the money coming from? Okay. Section 9 is where's the money going? How are we investing that when it gets to us as Beneva? Okay. So in this section here, and again, it says do not complete this section of converting an existing RIF or RSP into a RIF or LIF. Okay. Okay. So this part here, there's 3 sections. There's the daily interest account. Okay. Just a holding account. Okay. There's the GICs, this section here, I'm going to say we're not doing GICs at this point, but we're actually going to use the investment accounts, which is the third section down. So let's go through this part here. This is going to be super confusing right now. Okay, and I apologize for that.
This portion, yeah.
Okay. Okay. So on this part here, let's say we're investing in global equity, AGF. Okay. Now, you may have, and I'm actually, I don't want to do this. Okay. Here, I'll use the high yield bond, high yield fixed income is what it's called. Fixed income. And that is TD Asset Management. Okay. So I'm just going to grab my phone because I want to look up the fund numbers for you.
Yeah.
Actually, let's go in here.
I can do it.
I'm going to go into the front, back to our documents.
Yeah, sure then. That's good.
Yeah. Okay. And I'm going to go into. Oh yeah, no, it is in forms. I know. I have to know where to find them again. Okay. So what I'm looking for is I'm actually looking for investment account codes. Okay. So because this is all alphabetical, sorry for you that are online, because scrolling while you're watching somebody do this is not fun. Okay. So the investment account codes. Okay. These are the fund codes. So these are all the fund codes that we do have in here. Okay. It's called investment account codes. So I was going to use this one here, the high yield fixed income. Okay. And based on those, the fee series is 142, 242, all the way up to 542. The 100, 200, all the way up to the 500 depends on what kind of fee series you're using. Okay. So we'll just remember the last two digits, which is 42. Okay. The 100s, by the way, if you're wondering, what are the different fee series? Okay, they are at the bottom. Let's make this a little bit bigger again. Okay, so everybody online can read it. The 100 series is the back-end load, that's the DSC. 200 series is the front-end load or the purchase fee series, that's the front-end load. Okay, you would do at 0%. The 300 series, the low load, that's the 3-year DSC. And then the chargeback series, a 3-year and a 5-year option. That's the 400 and the 500 series. Okay. So.
Can you explain what more time this series on this?
Which series is which?
Yes.
Yeah. So the 100 series is the deferred sales charge. That's the 6-year DSC. The front end load is the 200 series. The 300 series, it's the low load, that's a 3-year DSC. The 400 series is a 3-year chargeback. And the 500 series is a 5-year chargeback. Okay.
I just want to add one thing here for 5-year and the back end loads. The advisor get the full commissions. For the others is a discount, is the reduced one.
It's reduced.
That means
But-
third and the fifth.
Fifth, 5-year and the first one, back end load.
So the 100
Yeah, 100
and the 500.
500. There's the full commission. But fifth one is the chargeback. DSC is the chargeback will go to whatever is on the client side.
Client.
But here, client is not losing any penny. If they want to withdraw the money before 5 years, then the advisor has to pay back whatever the percentage is applicable at that time.
That means first is good, back and fee.
Everyone is depending on how they fill their visa, KYC, or you can say investor profile. It depends.
Can you explain it again?
Later. Yeah, later, we will just finish this, then
Yeah.
we can explain.
Yeah.
Yeah, that is advisor, and please let him finish
Yeah.
the application. There are
Okay.
3 applications we have to do. I will explain right after the sheet, please.
So, and then I was going to use the global equity. So I know that one is the 45 series. Okay. Or the 45. Okay. So 42 and 45. I just needed that for the application when I fill this in. So I'm going to go back here. Now, I'm going to deal with the one-time pack first. So this form, basically, the first column in here where I put the fund names, that's where the fund names go, of course. Okay. The next column here, this is for the fund code. Okay. I'll show you how we fill this out in a moment. The next section where it has the % sign here, that is only if you're using the 200 series or the front end load and charging a front end load fee to the client up front. Okay.
Yeah.
That one he'll explain after as well.
Yeah.
Okay.
after that, yeah.
Otherwise, if you're not charging anybody, okay, if you're doing a front end load at 0, you can leave this blank. If you're using any other series, leave this blank.
Yeah.
Okay, so if you're doing a DSC or low load or chargeback series or front end load at 0, this column is always going to remain blank. Okay, so how do you do the fund allocations? That depends on the next 3 columns.
Yeah.
And where is the money coming from? The first column. So I'm going to show you this part here, this drop down menu.
Yeah.
I'm going to do this by %, not by dollars. Okay. The first column, it says periodic deposit. This is for a monthly or a biweekly pack. Okay, so any money that's coming from that, I have to allocate that money. Next one is a cash deposit or a single payment, so a one-time lump sum. So if I have money coming from a pack or a one-time payment, which we're going to do in this, if I want to allocate it differently, then I have to allocate that payment. Okay, and then if I have a transfer deposit, so money coming in from a transfer from another institution, how do we allocate that money when it comes in? So you could literally be allocating these different payments differently into different funds. Okay, and I'm going to show you how we do that. Okay, so let's deal with the periodic deposit first. So in this case, let's say we have a $100 pack. Okay, and I want it to go into a how do you want to do? Do you want to do front end load for packs?
No, DSC.
DSC?
Yes.
Okay. Okay, so if I'm doing my monthly pack into a DSC, it's going to be a 100 code.
Yeah.
So in this case, it's going to be 145 and 142.
Why I'm saying it, because normally people, RSPs, they don't withdraw. The front end, if they want to withdraw by a year, 2 or 3 years, then we go front end. But when, especially RSPs, people, they don't want to. What is better is always DSC.
It's long-term money.
Yeah, it's long-term, yeah.
Totally depends on what your style
whatever
is.
their profile says.
That one, I can't answer that one for you. So if you ask me what fee series should I put this in, I can't tell you. Because I don't know your clients. I'm not sitting with your client. As a wholesaler, as a product partner, I can't determine that for you.
Yeah.
I also can't determine, here's where you should put the funds for your client.
Yeah.
I can give you maybe a suggestion,
yeah,
but you have to make sure that you do the homework as the advisor. You're getting paid on it. It's your responsibility to make sure that you're looking after your client appropriately. If I recommend something and you don't agree with it, I say I give you that as a recommendation or a suggestion. You could do this, or use it as inspiration, is what I say. Okay, so if we do a comparison for you, that's a potential suggestion. If you follow it, you have to make sure that that is appropriate for your client. Okay, because when it comes down to it, if your client sues you, you're not suing me. They're not suing me. They're suing you because you put them into that account. Okay, that's why you have to do your due diligence on that. Okay, it's not saying I'm not taking responsibility, but if you're getting sued, I'm not. It's coming back on you. Okay.
So if we have questions with the profile selection or the fund selection, we can always check with you and get some suggestions from you.
You can, like, I might give you like some of our pre-built portfolios, kind of like, hey, here's an option how you could do stuff. If you're unsure, if you're not sure, like, why are we using these 2 funds as an example, right? And in what percentages should I do? If you're not sure about the investment world or why are we using standalone funds, the best thing that you can probably do then is use a portfolio, like the dynamic portfolios.
Yeah, that's what I was
right.
Like,
So
the portfolios.
Yeah.
Easy.
So in that case, right, you have all of your different risk profiles right here.
Yeah.
Right. Conservative all the way up to aggressive.
Yeah.
The fund manager, the portfolio managers, they're managing that for you and for your client. It keeps it simple. Okay. Have you ever heard keep it simple? I won't say the last word, right? But in those cases, let's say it's a balanced client. Most clients, by the way, land either in balanced or growth.
Yeah, balance.
Yeah, sometimes it's conservative, especially if they're getting older, closer to retirement, right? In that case, I would use the dynamic portfolios. I prefer them a little bit better, except when it comes down to the conservative, I would use the AGF. Okay, I prefer it better. Okay, performance-wise, that's why.
Yeah.
Okay, so the periodic deposit. Let's say we're doing a $100 a month payment, right? And I want it to go into this account 50% and 50%. This is not $50. Okay, because I indicated 50% up in here in this drop down. Okay, not dollars. Okay, I would suggest it's always easier to do it on a percentage basis, because let's say you have a transfer of, you know, $53,789.42 that the actual check comes in. It's different, and if you put on this as specific dollars, we're going to come back to you and say how the check is actually this. How do we split this now? Right. So that's for the periodic deposits, the packs. So when the pack comes in of $100 a month, we're going to split this 50% into this fund, 50% into this fund in this fee series. Okay. Now, what about the cash deposit or single payment? Let's say in this case, we're going to allocate this differently. We're going to allocate this into front end load. Maybe because it's an RSP, maybe they're saving money and they put this deposit in there because they're going to buy a house later on. So that now, that chunk, they're specifically saying, I want to use this for a home down payment as under the home buyer's plan. Okay. So in this case, you're saying, okay, well, you know what, if you're going to use that in the next couple of years, we're going to do this front end load. So now I've got the back end load codes here. So now what do? I'm going to have to do this. So I'm going to do this. I'm just going to copy and paste. Nope, I'm not. Okay, global equity AGF. And I'm going to use high yield. I'm just going to abbreviate this, okay?
Yep.
TD asset management. Okay, same thing as this high yield fixed income. I'm just not typing it all in. There we go. So I'm going to use the 200 series, which is the front end load. I'm going to do this at 0%. Okay, so that means there's no commission to you up front as an advisor on that particular chunk. Okay, so 245 and T42. Okay, that's the front end load code. These are the DSE codes, the 100s, 200s. Okay, I don't have to fill this in. I can though. It's going to be 0%. That's what I'm charging the client, 0. Okay. So for that pack, again, maybe I'm going to use 25% into the global equity so we don't have as much exposure, and 75% on the fixed income. So now money coming in from the pack is being split 50 and 50%. And the money coming in from that one-time deposit, which they're going to use as a home buyer's plan as an example, is going to be split 25, 75%. See how I can allocate it differently? Depends on the source of funds, right? I'm going to do the same with the transfer deposit. Okay, the transfer that's coming in, maybe I'm actually going to use the same DSC. Okay, so now I don't have to do 2 new lines because I already have the DSC codes in here. And let's say I want to have that 60% into the global equity and 40% into here. Okay, does that make sense, or does that confuse everything? So now I've indicated the allocations for the pack here, for the one-time payment here, and for the transfer money here. And they're different.
You know why we are saying this is the more confused ones? You have to pick the funds. The first thing, you must understand how to pick the funds, what kind of funds you are going to suggest to the client, and what you can use different funds, and you can use different codes. If only this section you have to really master.
Yeah.
How to pick the funds and all loads. Yeah, please.
This section here, literally this investment account stuff, is the hardest part of our application. Once you've mastered this, just like I've shown you here, you've got this mastered. I always say, and I've seen a lot of investment applications from different companies in my life, and because I've been doing the industry for about 18, 19 years, I will say the La Capitale accounts, these applications are actually some of the most simple ones, except for this section.
Yeah.
Okay. This is the hardest section that you're going to have to master. Okay. Has anybody ever read through an entire application? All the fine print and everything? You should.
Yes.
You should. Because this is an actual contract that you are setting up between your client and Beneva. You're having your client sign a contract and you don't know what's in it. I was a keener when I started this, or you can call me a nerd, when I started this industry, because I would actually take applications home and I would actually read through them. I would read through a prospectus, or I would read through an information folder. Okay, it's boring stuff. But now you know what kind of a contract you're having your client sign. It's a legal contract, not between you and the client or you and Beneva. This is a contract between the client and Beneva.
Yeah.
Okay. It's a legal contract. And you don't know what's in it. Okay. So everyone's going to go home and read contracts now. All these, I'm sorry. Read them in non-productive hours.
Yeah.
Not when you're not just before bedtime, because it's going to put you to sleep. Okay.
I
This,
have one more question.
sure.
So like if we are doing on the iPad, so we can choose these different funds on that one too or not?
Yes. The investment instructions, it's going to, again, go by the source of funds. So again, in this case, if you're doing it on the iPad, I'm not sure we're going to have time today. Just looking at the time. But it's not going to use the actual fund codes. It's going to be by redemption fees, purchase fees, moderate fees. But again, it's going to go through, if you have 3 different sources of funds, it's going to go through the investment instructions for each separate one. Okay. And I just did this actually. I did a transfer and they had a pre-authorized debit. When I was filling it out, it would actually say, are the investment instructions for each source of funds going to be the same? And I said, yes. So I only had to do it once. So when I was transferring it and the pack, they're going into the same fund. So I only had to actually do the investment instructions once when it came down to the mobile office. Okay.
I think I will book a time soon.
Yeah.
In January for the iPad.
For sure.
Yeah.
Yeah. Yeah. This banking information down here, this is only if you have a GIC and the client is taking a payment from the simple interest. So don't fill in the banking information here. If you do, it's not gonna be bad. Okay. Now, section 10 and 11, right? It's wording on a contract. Okay. I'm not going to go through that.
Yeah.
Section 12. So all of section 12, it says mandatory section for non-registered plans only.
Yeah.
So what kind of an account are we doing?
RRSP.
RSP, which is not non-registered. So all of section 12, you don't have to do it. All of these, which are section 12, these 2 pages, leave them blank. Okay. Still section 12 on the next page. Okay. Now we come to section 13, pre-authorized debit. In here, in this example, we're doing a one-time payment and we're doing recurring packs. Okay, so now I have to put in the payer's contact information. So in this case, it's going to be me, right? Because I did this in my name. So I'm going to put in all my information, whatever else it is again. Okay. If you're doing a spousal RSP, only the spouse may contribute to a spousal RSP. In that case, then the payer's contact information has to be, in that case, it was the husband who's being the contributor. So so the banking information that comes in has to be in the husband's name.
Okay.
How about if there is a joint?
If it's a joint account, if you're doing a void check or whatever, it has to show the husband's name on it. Okay. And that's fine if it's a joint account, but make sure he is entered as the payer's contact information. Okay. So we're not doing a spousal RSP, so it would be my name. Okay. I'm doing a single payment. Let's say I'm doing $10,000. Okay. And I'm also doing recurring payments, which is the pack of $100. How often? Okay. Check one option again. I'm doing once a month on the 28th of each month.
You can go more than 20.
Yeah, if you say the 31st, we're going to take it early. Okay.
Is the
Yeah.
last date is 28.
Last day is 28. Yeah.
For
Yeah.
insurance and all.
Okay. All right. So when we get this application, we're going to start the packs on the 28th of then whatever month, right? So if it comes in now, we would probably take it for January 28th. Okay.
Yeah.
If I said the 15th, and I'm doing this application on January 14th, we're not going to have enough time. It's going to hit next month. Okay. Just prepare your client for that, because they're going to be like, how come the payment didn't come out on the 15th? Well, because it was too close. Okay. But when we receive this application, we're going to take this single payment, this one-time payment, right away when we start processing the account. Okay. So let your client know if they're doing a single payment, we can't delay that until the 15th of next month. We're going to take it right away. So the money needs to be there. Okay. Then I'm going to fill in my banking information. Again, that's from the void check. Attach a void check if you have it, or the deposit slip that you get from the bank. Your client will sign it here. Okay. They'll date it. Okay.
Why do you need so many time banking?
We only
You
need it
already-
once.
You already put once. Your
No.
banking-
No, we didn't
No.
put it.
Why? Okay. Back in here, right? This was for GICs only.
Yeah,
If
you
they're
have
taking
put
that.
it here in the very first, second page. I put that. Okay.
The banking info? No.
No, okay.
No,
Sorry.
no.
That's weird, sorry.
Okay. So I'm going to go back to section 13 there, sign it, date it. That section is done. That authorizes us to be able to take money from their bank account. If this is not signed, we can't do that. Okay. Because can you imagine if we just said, okay, well, you know what? We're going to start taking money from you, but you haven't signed off on it. You haven't approved it, right? He's going to get mad at us. Right? Rightfully so. Section 14. Okay. There's one part in here for limited authorization if you have it already. Okay. But this is a new application, so you probably don't have this. Okay. So now here's where your client is going to sign. Let's say they're signing in Edmonton. You can put Alberta. I do. This 14th day of January 2023. Crazy, eh?
Yep.
Let's say this was Ashraf, who is my advisor,
I love to-
right? He can put in his email, his telephone number as well. I'm going to sign here as the client. Ashraf is going to sign here as my advisor. Okay.
You can do it for yourself as well.
Yeah, absolutely. Okay. Most of you have an advisor code with us because you're contracted through Beneva
Again,
anyways.
it's a confusion. When it's come to advisory code, it's only 3 words, like mine is PCI, is only that's it.
Yeah.
And then when it's come to the general agent code, then we have to go 5331, whatever is exterior, and I have to put my concert code, or what is that?
Okay.
Normally we put both. And R is just like MA06 kind of thing for
What
us,
happened? There we go.
for experience, PA6.
What's going on here? Strange. Oh,
Sometimes it doesn't work.
it's my the
Code
space bar.
Number, yeah.
Space bar is like making you go somewhere else. Okay. What if you don't know the general agent code? Leave it blank. Because we're going to find you through your advisor code.
Yeah, but Experior has a P is going to be general agent code is I don't know, because mine is I don't know. I only know my concert code and this advisor code PCI. That's it.
Okay.
It
That-
says
and that's fine.
generally it says the number is 129 something.
Oh, okay.
Yeah.
So it'll say PCI dash.
Dash
1, 2, 3, 4, 5,
129,
6.
Yes,
That is actually for disability.
that is for.
So if you're doing a disability insurance, those 6 characters are what you put on the disability applications. The other, the PCI,
is investments.
is your investments and life and CI. Okay. If you don't know,
Life and CA, we have a different code.
if you're
10 something,
using-
245 or something like
yeah, it depends on whether you're doing it through the Capital stuff,
Yes.
which is no longer.
Yeah.
Or the SSQ stuff.
You haven't,
So that one you're talking about is the SSQ.
but they are going to update those codes.
Yeah. Yeah, you'll get a Beneva code. Okay. And then Ashraf is going to put in his email and his work phone number again. Okay. Then limited authorization on these. Limited authorization allows you as an advisor to do certain transactions on behalf of the client and sign on their behalf. Okay. The types of transactions that you can do, and you have to do a limited authorization. If you want that, you have to do a limited authorization per plan. Okay. You can't check one or two of them off and say, okay, I'm good. I've got all these done. Do it one per account. Okay. And it should say on here somewhere, I think. But the types of transactions that you can do, again, if you read this, these are the types of transactions you can do. These are types of transactions you cannot sign on behalf of the client, and that is starting up a pre-authorized debit. So you can't sign a pre-authorized debit and say, hey, yeah, I'll sign so that we can take some money from your account. Okay, can't do that. You also can't change the banking information. Your client has to sign off on those. Okay. You also can't change beneficiaries on behalf of your clients. Okay.
Sensitive issues.
And client bank or beneficiary changes has to be a wet signature, not an e-signature. Okay. That's the only form that you need a wet signature, an actual signature by pen. Okay.
So on this point, we can do like e-signatures? How do we do it?
Yes, yes.
Because like we skipped the signature part. How do we do it on the laptop?
So that would be through either like an Adobe account or DocuSign. Okay. Probably a DocuSign is what you're probably going to use, like a paid one. Right? Okay. Yeah. I don't do it. I actually use my iPad. So, or I have this printed out and have my client sign it. Okay. Contact holders information, put their information in there. Right. And this authorizes Ashraf Azim to sign on my behalf. Okay. And again, I'm going to put these signed at, so Edmonton, Alberta, the date, I'm going to sign it. Okay. If I had an irrevocable beneficiary, which I'm not, it's revocable. Okay. And then this part here would only be for spousal RSPs. Okay. You put the spouse's name in there because the spouse has to sign off on it too if they're contributing. Okay. And again, the spouse would sign if they need it. And then Ashraf is going to put his code in here. So PCI. Okay. And he's going to sign and date it. And that application is done. Okay. So that's to start an RSP application. Now, the TFSA application, very similar. There's going to be less sections in there. Okay. Okay. And the LIF or the LIRA accounts are going to be pretty similar as well. Most of all that stuff, I'm not going to go through those applications because it's going to be similar. The hardest part in this one, again, is the allocations of Section 9, the investment instructions. Okay. Now, because we did a transfer, we also need a transfer form, a T2033. So I'm going to go back to page 2 because I know it's on there, and it's called Direct Transfer Between Institutions, T2033. Okay, this one here. So a T2033, I'll make this bigger for those of you who are online and watching me. Okay, so if it's an existing client, you can put their client account number that starts with 300. But in this case, this is a brand new client. So I'm going to put all my information in here, fairly straightforward. But oops, and I messed up. I missed one. There we go. Okay. And it doesn't like me. Okay. Just gonna leave that blank.
No, that's it.
Put my address in. You get the gist on that stuff. That one's the easy part. Okay. All right. Section B, the amount to be transferred. So how much is it going to be transferred? Where is it coming from? Basically from the institution. So in this case, I hereby request let's say we're going to do the total amount. Okay. That line is done. It's either going to be a total, partial, or I might move 10% or just the matured units. Most of the time you're moving the entire account. Okay. If you're doing a partial amount, like in the case where they have a group RSP, they want to keep that account open and keep contributing into it. Let's say I'm only going to move $10,000 of that, right? Then I can do a partial. So in this case, let's say we're moving the entire 54,000 from that other company, which we mentioned was IA Clarington. Okay. What the plan or the account number is for that IA Clarington account, I don't know. Let's just put some numbers in there. Okay, that'll be on their statement.
So don't be confused when it's a group, then it's come with the plan number and the account number.
Yeah.
If it's individual, then it's only the account number. Yeah, that is
Okay.
the difference.
That'll be on the statement that the client gives you. Okay. All right. If it's a spousal RSP, then you put the spouse's name in there or ref. Okay. Date of the transfer. When do you want it transferred? Do you want to say a specific date? If it's a GIC, then you can put the maturity date or upon receipt of this form. So when they get it, they start transferring right away. Hopefully. Hopefully. Right? All right. Name of the plan issuer we said was IA Clarington. However, Claire.
Yes, sir.
What if I don't know the fax number or the address? Sorry.
Go to Google.
Yeah. I'm going to go to Google. Clarington. I have to spell this one right.
Yeah.
T2033. Guess what?
Yeah.
Transfer form from IA Clarington. And guess what's on here? I have their full address. So I'm going to do this. I'm going to copy this. Copy it. Go back to my T2033. I'm just going to paste this in here. I also need their fax number. Done. Copy it. Paste it. And done. Okay. Most companies, you should be able to find that information just by Googling that. Okay. Because if someone from IA Clarington wanted to do the same to us, guess what's on our stuff? Same information.
Yeah.
So they can find our information on there too. Our fax number makes it easy to transfer between institutions. Unfortunately.
Yeah.
Okay. That section is done. Okay. Section C then is where is it going? When we get it, where is it going to go? It's going to go into an RSP. We're going to say it's into a new plan. They're going to send it to our address here. If it's a locked-in fund, we're going to put in the whatever, like a LIRA as an example. We would put the jurisdiction. Let's say it's an Alberta LIRA or an Alberta pension. Okay. Then I would put it in here for an RSP. You're going to leave that blank. Okay. Have your client sign and date it, and you're done. So if you had multiple institutions, let's say you're moving from IA Clarington and TD Bank and Scotiabank, you're going to do 3 T2033s, one for each institution.
And then attach it to the same.
And attach it to the application. Absolutely. Now, because you're doing a PDF or a fillable PDF or a paper application, you are responsible as the advisor to fax that to those institutions. Okay, so that's where you're going to take this now. Once it's signed off, you're going to fax it to IA Clarington. We don't do that for you unless it's sent in through mobile office and you've given us the fax number. That's the only time that we'll actually fax it out for you. Now, even though we say that we do that, which is good, we do. Okay, I would also suggest you do it as well. Why? To make sure they get it.
Yeah.
If they get it twice, how many times are they going to transfer the money?
Once.
Once.
They'll look at it.
They'll look at it twice, but that's it. Okay. But at least you know they've got it. Because what happens if they didn't get it? Now you're waiting, and then 2 months later, you phone me and say, hey, by the way, I sent in a transfer and it's not in your accounts. Yeah, I can't see it in the advisor center. My first question for you is going to be, do you know if it was transferred, or did you connect with the other institution to see if they got it, it's in good order, and did they transfer the money? Until we get the money, we can start processing and set up the account, but until the money gets there, not going to be anything invested. We're not going to invest money on the hopes that we get it later on. We need a check. Okay, so that's the first case: is phone the institution. Have they got it? Did they transfer it? Okay.
So there is one, every institute has a different fee to transfer it, or it is like a one kind of.
Yeah, so with most institutions, there may be a fee to close the account. So in the case of us, let's say someone has an RSP account with us and they're going to transfer it out, I believe the fee is $65 that we're going to withhold. Yeah, some are 50, some are 65, some are 100, whatever, just depends what it is.
Even 150.
Yeah,
So you have to check first. You have to inform the
you can
client.
inform your
Always pay that.
you can inform your client. The client is going to end up paying for it.
They usually take off the money from the account and transfer the lessons.
Correct. Yes.
You have to inform the client.
Yeah, you may not know though. They may not even know, but there could be a $50 fee or whatever else it is, 150, 65, whatever. Yeah. Each institution is going to be different. I don't have the answer for you on what it's going to be. Okay.
It's for RBC tax number.
Oh, yeah,
To stop this.
sure.